To afford the average home in Toronto right now, you need to be earning about $207,000 a year. In Hamilton, that drops to about $161,000. But here's where most people get it backwards. To actually get approved for that exact same Toronto home, the bank wants to see $246,000. In Hamilton, it becomes $188,000. The bank's number is higher, not lower, and almost nobody realizes why. It comes down to one rule buried in how Canadian mortgages work called the stress test. And it changes everything about how you should actually think about what you can afford. Today I'm breaking down both cities, Hamilton and Toronto, what the stress test really does to your numbers, and the costs that don't usually show up in the math. Quick disclaimer, these numbers use a 5% mortgage rate and a 25% amortization. Your real rate and credit profile will move these numbers. If you want to run your exact numbers, reach out, there's a link below, we can have a chat. Now let's get into it. Toronto's average home price right now is just over $1 million, $1,050,000, $1,070,000. Hamilton is about $750,000. Since the end of 2024, mortgage insurance covers homes up to $1.5 million. So both of these qualify for a low down payment of 5%, which is the minimum, on the first $500,000, and then 10% on everything above that, up to $1.5 million. On that Toronto $1,070,000 home, the down payment would be $82,000. Mortgage before insurance, $988,000. Since you're under 10% down, CMHC, which provides mortgage insurance, their premium is 4%, and that's $39,520 added on to your total mortgage. That total brings you to $1,027,520. At 5%, your real monthly payment is $6,007. Property taxes run you about $580 a month. Heat, which is included in the calculation, is a standard estimate of $150. Now looking at Hamilton, that $750,000 average home. Keep in mind for first-time home buyers especially, there are a number of homes below this $750,000 average that are available. Don't let that number scare you. We're just using an average for this example. $750,000 gives you a down payment of $50,000. Mortgage before insurance becomes $700,000. Same 4% bracket for the insurance gives you a premium of $28,000 with a total mortgage of $728,000. At 5%, your real payment is $4,256. Property tax in Hamilton runs a little higher than Toronto percentage-wise, so you're looking at about $813 a month. Heat is $150 again. Now, the stress test and where it gets interesting, this is the part that doesn't often get explained properly. Lenders don't qualify you using the rate you'll actually pay. They use what's called a stress test. The higher of your contract rate plus 2% or 5.25%. Right now, that means they test you at 7% even though you're paying 5%. That changes your payment for qualification purposes only. You never actually have to pay that higher amount, but the bank needs to see enough income to cover that higher amount on paper. Toronto, at the stress test rate, your premium jumps from $6,007 to $7,262 a month. That's the amount you'd have to qualify for. In Hamilton, it goes from $4,256, like we mentioned, to $5,145 a month. You would have to qualify for that amount to receive the loan on the house. Add property tax and heat to each. Divide by the maximum the government allows lenders to use for housing costs, which is 39% of your gross income, and here's what you get. Toronto, the real rate needs to be $207,000 a year. Stress test rate needs to be $246,000 a year. Whereas in Hamilton, the real rate needs to be $161,000 a year, with the stress test rate needing to be $188,000 per year. The bank's number is always the higher one. That's not a loophole that lets people overborrow. It's actually the opposite. It's a built-in buffer that makes sure you can still afford the home, even if rates climb after you bought. Worth knowing because a lot of people assume getting approved means the bank thinks you can comfortably afford it. It actually means something stricter than that. And side note, whatever your maximum qualifying amount is, doesn't mean you should go to that amount. We always recommend staying under your qualifying max. Just a little side note to keep in mind. Here's where it flips back the other way. The bank's formula only includes your mortgage, property tax, and heat. It doesn't include home insurance or maintenance or any of your other regular monthly bills. You're still paying those, so add those in for the real picture. In Toronto, insurance is around $225 a month, Maintenance reserve at 1% of the home's value per year, that's $892 a month. Add that all up and your true monthly cost is $7,854. That works out to needing about $242,000 a year to keep that at a sane percentage of income, even using the real rate. Let's look at Hamilton again. You have insurance around $175 a month. Maintenance, we'll call it $625 a month. The true monthly cost being $6,019. That puts you closer to $185,000 a year. Notice something. Once you add the real cost the bank ignores, the number lands almost exactly where the stress test number already was. That's not a coincidence that you should rely on every time, but it's a good gut check. If you can comfortably clear what the bank's stress test requires, you're probably accounting for insurance and maintenance whether you realized it or not. Now, Hamilton is made up of a lot of different areas. You have Ancaster, which is one of Hamilton's most desirable areas, with average prices around $1,050,000 to $1.1 million. A down payment there would be $80,000. Mortgage with insurance would be $1,008,800. Real payment there would be $5,897. Stress test payment would be $7,130. Property tax $1,138, and heat again at $150. Real rate income needed there would be $221,000. Stress test income needed $259,000. A comparable to Ancaster Toronto neighborhood, because the average prices that we're talking about are definitely not in the most desirable areas. You'd be looking at more like $1.5 million in Toronto. Leslieville, the beaches, you get the picture. At $1.5 million, you've hit the insurance cutoff, so now it's a 20% down minimum. That's $300,000. Mortgage of $1.2 million. No CMHC premium there because you are paying the full 20%. That gives you a real payment of $7,015. A stress payment of $8,481. Property tax $813. Heat $150. Your real rate income needed there is $245,000 with a stress test income needed of almost $300,000. So how bad do you really want to live in Toronto? Because in Toronto, that $1,070,000 average gets you, like I said, a smaller detached home or maybe a larger attached depending on the neighborhood. In Hamilton, that $750,000 puts you solidly in detached territory with an actual yard and a good area. The honest pushback usually comes to the commute. The GO train from Hamilton's West Harbour Station into Union is about 75 minutes. Running hourly outside peak times on the Lakeshore West Line, that's real time that you have to account for if you need to be commuting to Toronto. For most people, what they save on housing outweighs that time, but that's a personal call, not a financial one. There's 3 checks in either city. 1, know both your real payment and your stress test payment. The bank's approval tells you what they think you can survive, not what you'll actually be spending. 2, add in insurance and maintenance yourself. The bank won't do it for you. 3, just because you're approved doesn't mean you should take the full amount like I mentioned. The bank's calculation has a safety buffer built in it for them, but build your own buffer in there as well. The numbers are clear either way you look at them. Hamilton needs meaningfully less income than Toronto at every price point. Real rate and stress test. If you're trying to figure out if Hamilton actually makes sense for your specific situation and your numbers, that's exactly what I help people do. If you'd like to look at your situation, there's a link below. Happy to have that chat.